Dear friends, DeFi, short for decentralized finance, has been a very hot term recently, and the entire DeFi space has been buzzing with growth. But what is DeFi, and what can its impact be on the future of finance? Well, you will find out in this episode of your Fintech Capsule Explainer Series. Here we go. This episode is brought to you by Q9 Capital, a platform I personally use. Check out the link above for more details. DeFi stands for decentralized finance, sometimes referred to as open finance. It's a delivery of financial services without the traditional centralized intermediaries. Today, finance as we know it is centralized. There's a core set of institutions we all use, which all of your financial activities go through. When you send a payment to a friend, you need to go to a traditional bank or a payments platform. When you want to get a mortgage, you need to get one from a bank. When you want to invest in stocks, you need to work through a broker. But that started to change about 10 years ago when we started seeing the rise of decentralized assets like Bitcoin that allow us to send something of value from one person to another without any intermediaries. No bank stands in the middle when you want to send a Bitcoin from one person to another. But despite its decentralized nature, anything beyond that still generally takes place today by centralized intermediaries, like centralized crypto exchanges to crypto custodians. This may seem somewhat ironic, as we're using the same centralized models we use in traditional finance to handle digital assets. And you're right, but this is where decentralized finance comes in. DeFi allows us to use some of the inherent attributes of blockchain technology to completely reinvent finance, so we can conduct financial transactions without any centralized intermediaries. Unlike centralized entities that have an office and employees, DeFi platforms operate using blockchain smart contracts, which are basically contracts that are written in code. If the conditions coded in the contract are met, then the payout or consequences are automatically executed. Basically, the contract is fulfilled without any human intervention. Such smart contracts are fully transparent and available to anyone to inspect. This is very different than traditional banks, which still have a lot of manual processes and human staff that keep the inner workings or operations highly secretive. DeFi not only makes the process faster, cheaper, and more transparent, but also allows such platforms to scale without the limitations of human bandwidth. In addition, such platforms are open to anyone. A traditional bank can pick and choose its clients. It can decide to work only with the ones that will be the most profitable or exclude clients from certain countries. DeFi platforms are open to anyone with a basic internet connection and access to cryptocurrencies. This is seen by the proponents of DeFi as another example of how blockchain can help in promoting financial inclusion and providing access to financial services to anyone, regardless of their wealth, status, or where they were born. Finally, DeFi does not rely on existing financial infrastructure, so it's not affected by existing legacy systems or vested interests. It does not touch fiat currencies like dollars or euros and only operates using digital assets. It's able to leverage the latest blockchain and smart contract technologies and benefit from the speed, security, and transparency of digital assets. Some of the initial services that such DeFi platforms offer are quite useful and are quite similar to what you are used to receiving from traditional financial services providers. For example, let's say you have $1 million worth of cryptocurrencies like Ethereum, and you're looking to borrow $100,000 to buy a new house. If you go to a traditional bank, you will not be able to borrow money using your crypto assets as collateral, since your traditional bank does not recognize cryptocurrencies as collateral for a loan. However, a DeFi platform allows you to deposit, say, $200,000 worth of cryptocurrency and be able to borrow $100,000 in US dollar-based stablecoins. You can then sell them on an exchange for real US dollars or simply use those to buy your house. What these DeFi platforms are doing is very similar to what your bank does when it gives you a mortgage using your house as collateral, or what a private bank does when it lends you cash using your stocks as collateral. But unlike traditional banks, all this happens in a fully automated way, using smart contracts without any human involvement. The collateral and risk management is fully automated, as the smart contracts can start liquidating your cryptocurrency assets if, say, the value of your collateral falls from $200,000 to $250,000. This way, the platform has very efficient risk management around your loan. Another use case that these DeFi platforms offer is crypto lending. Coming back to that theoretical $1 million pile of Ethereum that you hold, you can use DeFi platforms to lend it out to others who may want to borrow it. For example, crypto traders and thus earn an interest on your crypto assets that you have lent. Again, this is very similar to what your broker does with your stocks, sometimes without customers being aware, or what an investment bank does with your stock borrowing and lending for their institutional clients. But once again, this all happens in DeFi without any centralized entity in the middle, and the process is accessible to a much wider base of users than traditional banking. It is important to understand that we're still at the very, very early days of DeFi. Even if we just look at the decentralized finance applications in the crypto space, they are still relatively small compared to centralized platforms. But things are moving very fast, and this is an area you need to keep an eye on. If there's any topic you want me to explain, or any question you want me to answer, feel free to let me know in the comments below. Hope this was a useful video, and stay tuned for another Fintech Capsule Explainer Series soon.